Hey everybody, welcome to Trading Capital's daily analysis video discussing some of our positions and future positions that we may take at key support technical levels. We're going to be discussing here Apple, which we are holding as a long, Microsoft, and Tesla. So three big cap tech plays that people certainly love. That's the blue chip tech darlings. Ultimately, Apple, I just want to say what a tremendous swing in Apple on Friday. We sent out the alert to double our position on Apple around 134 here 12. We sent out the alert, added an extra 1% of our portfolio to Apple, which brought our average down to the 138.65, which we're now positioned tremendously due to the fact that we added at this key technical level, brought our average down after the huge rally and swing on options X. We have now positioned ourselves in a magnificent area to profit handsomely as Apple and the rest of the markets get the potential short-term bounce that I think is coming. Going to the daily chart on Apple, you can see that a lot is going on the chart here, but we will focus on for now. Let me just take that trend line away. Obviously, you can see here you had your initial channel that you were trading in. You had it on multiple occasions here as support. The third time you pierced it, came back up, retraced back to the original parallel channel, hit resistance, sold off tremendously. And when you factor in that up here at the end of March, we were trading at almost 180. And now we were all the way down at the lows to 132. That is a precipitous fall on the largest company in the world, the largest publicly traded company in the world. And one of the reasons we added here on the daily chart is you had this massive confluence of support here. So this was a massive surge area where you had your time count to the upside breakout. So we added it at the initial breakout level, which also managed to match up with this pivot high, this pivot zone, this chop in here, this pivot zone, and this pivot zone. So you had 1, 2, 3, 4, 5, and 6 different areas of tradable ranges before breaking out into your QE upward channel. I'm just going to remove the moving day moving averages so the chart is a little bit crisper and clearer. Ultimately, I do think Apple can retrace to fill this gap at the minimum. There is a chance that it could come all the way up to here on the charts, which would be a very, very strong area of resistance. We would most likely be looking to exit our long position as the risk to reward ratio narrows in favor of the risk. From our level, that would be a nice 8.6% gain or 8.9% gain in around that region. So that would be a fantastic level. If it can retrace, fill that gap, be prepared to unload our long position in Apple for once again yet another profit. Do I think Apple goes lower over the longer to medium term? Yes, I absolutely do, but I think the markets are getting to a scenario where they could potentially start staging somewhat of a little bit of a bounce. That being said, don't be fooled and don't try to get cute with this market by over leveraging ourselves. I ultimately think Apple's next level of support is this longer term trend line here that connects your pivot high, your pre-COVID high, your initial breakout zone gap up. And I think this will be a big area of support, but notice how you've bounced pretty close to it, just depending on how fast the sell-off, the next decline happens in terms of what speed and how many days does it flush into this next level of support will determine whether this is intermediate, minor, or major at that point in time. But your next two big areas of support, this 107, and I do think you should get to this gap fill around 95. A lot of people are going to be thinking there's no way Apple's going to pierce that whole number of 100. It's way too big of a company. It's way too successful, but don't underestimate it. The technicals are saying that there's a tremendous more downside ahead if the Federal Reserve continues their path of monetary tightening, which I certainly think they will, at least for the next few months. But we will certainly reassess that and determine how it goes. But look at this decline. When we measure this decline from the low to the high, it's a 26% decline in what was a $3 trillion market cap. So just fathom the amount of money that has been wiped out. And I still remember monitoring this time count. This is 11 days, your classic bear market rally. People were like, nope, we're going to new all-time highs. Look at the power of this rally. And you just had this massive collapse. What's interesting is that we said that when you had this type of rally in the 2000s, this type of rally was preceded by the biggest sell-off in stock market history, the dot-com crash. So it really stands to suggest we are kind of on the route to fulfilling the same prophecy as what transpired in the dot-com crash. Just truly, truly magnificent, the power of understanding how fear and greed work, and realistically realizing that technicals trump everything in the short term. And when you have really the biggest fundamental driver blowing wind at this market as a headwind instead of a tailwind, the markets have the most highest probability of heading lower until they revert course and change the overall fundamental picture of this bear market rally. Let's take a look at Microsoft. Microsoft's interesting too because we had this long-term QE channel. It's a fainter parallel channel that you were trading in for just about 2 years until you broke it over here, retraced back, retraced a second time back to the channel, and now you've fallen. Now I want you to focus on this darker orange and blue channel. This is the new channel that we've been creating. You've been ping-ponging back and forth. Notice how you hit the low range of the channel. Initially what I was thinking here was you were going to pierce this channel and come into this green area of support. There's a key technical gap fill here around the 243, 244 mark. It will also intersect with these pivot highs here. So I thought the markets were going to flush in there. We were going to issue some buy orders to buy in that range. However, the markets bounced before that, just slightly bounced before that. So now the question is, we're most likely going to have to look lower for a support level. I don't think that support level is going to hold. I think Microsoft in the short term is probable to get some sort of a bounce like this, and then potentially look to maybe get a small bounce off of this trend line, but I'm very skeptical about this parallel trend line being any type of support. I do think there's a small chance that you can get a small bounce, but ultimately you're going to break through that pretty quickly and head to the lower range of this channel. I think this is your massive longer term trend channel, and one of the reasons why I'll show you is it connects your pivot high. Sorry, the chart's going wonky on me. Let's just fix that. It connects your pivot high in the dot-com crash, just before the dot-com crash, and then it also connects your pre-COVID high and your COVID low. So I think because this is going to be a very important level of support and resistance for one simple fact. Your pre-COVID high here, your pre-COVID low here. This was before all of the stimulus in terms of mass stimulus was injected, and this was when the mass stimulus was injected. So it stands to suggest that you retrace to somewhere in between this range. And if you notice how most of the smaller to medium cap tech stocks, a lot of them have basically double bottomed at their pre-COVID low, and a lot of them have actually pierced their COVID low and made substantially amounts of lower lows on the chart. So there is obviously the stronger case that Microsoft should hold this low, but if the markets get really nasty, it could pierce this low to some degree, which would be a tremendous shock to many institutions and retail investors, and they would certainly be spooked. But nonetheless, there are buy levels for Microsoft. There's going to be bounces along the way. Nothing's going to happen in a straight line. And we will probably be buying our next level of support for a trade. And we constantly reevaluate just because this is the one thing I want you to keep in mind. When I issue support levels, the importance of understanding that those support levels could change by the day or by the week will save you tremendous amounts of money over the long term. Just because I issue a support level today or tomorrow or a week from now does not mean that that support level holds the same amount of weight. That's why it's important to continue to listen to these videos and update the analysis, because not all support lines are created equal when price action transpires over time. Certain levels changed based off of how much a market has sold off, how much a market has rallied, whether or not you're on a time count, whether or not you're hovering and consolidating above that key support or resistance zone. So there's many different factors, as well as we have to take into account what the big indexes are doing. Ultimately, we've seen the markets fall every time the S&P and NASDAQ get weak. It's very difficult for individual stocks to maintain a rally when the big indices are falling. So just keep that in mind, many different factors, but the overall next support that I'm potentially looking at for a potential swing trade is going to be, let me just get my trend tool out and let me just monitor it. It's going to be this level here. So I think this is a massive, massive level around 230, 231. You have your pivot high, you have your chop, your original consolidation, breakout, almost your back test to this trend line, and then your massive QE run. There's also a technical gap fill here on this 233 mark, which you should pierce. And then we will also be looking to add, buy Microsoft around this pivot zone here, over here around the 210, 209 mark. And one of the reasons we'll add there is you had massive chop here, multi-month consolidation before breaking out. And it also should coincide with the near top of this parallel channel, your QE, your pre-QE and your post-QE channel. So just keep those couple levels in mind. We'll have to reassess as we go. Let's jump into Tesla. Tesla's favorite is the favorite electric car vehicle. Maybe not so much now for certain candidates. I think one of the reasons Tesla's been hit recently is you've seen a lot of political views expressed by Elon Musk over Twitter, in the sense that he's now officially said he's voting for the Republican Party. In the past, he has voted for Democrat because they were the kindness party, and this is all what his tweet is saying. He said the Democrats were the kindness party, but now they are the party of the new division and hate, so therefore he's voting for Republican. So I think that by him expressing outright who he's voting for in the next election, that is going to obviously sway a lot of bigger investors out of his company, for the one simple reason there's a lot of polarized opinions in this planet that will hold true to their political ideology and not invest in a company that someone who doesn't support the same political ideologies is running. So I do think you have a lot of that going on. Also a lot of the fact that Tesla is overvalued at this point in time. Yes, it has all this IP that Cathie Wood is stating, you know, which big data, no question, is a future industry that will survive and thrive, but just not yet. Nothing survives a quantitative tightening cycle unless you're curing cancer as a company. Even then, be skeptical. The biggest seller in the market is the Federal Reserve, who's going to essentially hold more power than them in terms of a fundamental analysis approach of the markets. So notice on Tesla, you did hit support here. You have this pivot low as well as these pivot lows. You came into there. We were very, very close to buying, but I just decided to hold off on Tesla because just wasn't comfortable buying it yet at this valuation, as opposed to some other safer blue chip companies that I don't think have as much downside as Tesla. And notice how we were watching this trend line, this blue trend line here, which look how you connected on your first pivot here. You came down, pierced it, and rallied and closed above that. So the power of trend lines is truly amazing. I've seen, thousands and thousands of these trend lines, and every time they play out perfectly as a support and resistant line, it just blows my mind. The technicals are truly something to admire and learn and study, because it ultimately, technical analysis is more than just lines on a page. It is levels of support and resistance, understanding fear, greed, when a market is in exuberance, when optimism, when pessimism is prevailing. So it's all human emotion, and that's the one constant through the stock market history that will remain. Companies come and go, but greed and fear always stay. And nothing more powerful than fear in the short term. In terms of where I think the longer term Tesla can go, so the funny and crazy thing is that when you analyze all of the other so-called blue chip stocks, or even safer mid-cap stocks, many of them have tested their COVID low or broken their COVID low. And when you think Tesla's COVID low is all the way down here at $74, it just blows my mind that people think this will never happen this low again. Imagine if Tesla somehow flushed all the way down to this COVID low, or even the pre-COVID high around 196. First of all, Elon Musk wouldn't be the richest person in the world anymore. And when you factor in, Elon Musk only became the richest person basically within the last 2 years. Elon Musk was redeemed. After this blow-off run, that's when Elon Musk became the richest person in the world. But if it retraces to the stimulus zone before any of the 2020 stimulus was injected, that would be sub $200, which is scary to think for those long-term Tesla bulls have been buying and hodling. Where I'm comfortable starting to own Tesla as a core long position is this key technical gap fill here, the 407 mark. I do think you could even get a potential pierce of 400, which would just be a sweet buying opportunity. Certainly an accumulation zone. I do think Tesla goes higher over time. But don't be surprised how low Tesla could flush. We will have a buy zone at that 407. We would have another buy zone at these wicks here, the 334. We would have a fifth buy zone at these lows here, or sorry, a third buy zone there at 274. And then our massive one would be on this COVID high. Okay, we would be backing up the truck. And then we always leave a little bit more room on the fifth position to add. If for some reason we got to the COVID low, we would be backing up the truck and adding to our position tremendously. So Tesla, obviously, if it got down to those levels, I would start thinking of a position anywhere in the size of 6 to 10% of my portfolio, obviously 10% being on the risky side of the equation. But if you have the time aspect on your side and believe in the power of EV and having exposure to EV, Tesla really isn't going to be that risky at these valuations, for the simple fact that it's more than just an EV company. You're technically getting exposure to EV, you're getting exposure to potential commodity mines. I know Elon Musk has expressed that Tesla would consider buying mines such as not silver but nickel mines or copper mines to facilitate the need for their supply, because the one thing that's been lacking Tesla is certainly not the demand for people wanting to buy Teslas, but it's been the supply. And that's why they've been producing many things in-house, building the gigafactories and wanting to expand across multiple gigafactories to build the infrastructure that they need to push EVs as well as autonomous vehicles into the future. And that's the thing, you're getting exposure to EV with Tesla, you're getting exposure to potential commodity markets, you're getting exposure to autonomous driving, and you're getting exposure to big data, cloud data. So there's kind of really 5 different sectors that Tesla and carbon credits as well, ESG. So there's a few sectors that Tesla comprises as a whole that you get exposure to, and that's why it does hold that higher than usual PE valuation, which I do think will get crushed nonetheless as this recession and bear market takes hold. As always, thank you for being members here with Trading Capital. We'll continue to keep updating you as the markets progress through this nasty downturn. Overall, I do think the markets get the short-term bounce. After the bounce, the next down leg will start precipitously and faster than people think, especially since quantitative tightening is set to commence the start of June. And that's certainly when I think the real estate market will take a hit and really start to drive down equities.